These two reports shows something brutally honest: who owes you and who you owe. And speaking of delayed payments, let's talk about the one quiet report that exposes operational discipline. And that report is the AR or AP reports, or better known as accounts receivable or accounts payable reports. Nobody really checks this one until something feels tight. These two reports shows something brutally honest: who owes you and who you owe. Accounts receivable is the invoices that haven't been paid yet. You've done the work. They're supposed to pay by now and they haven't. That's the accounts receivable. And that's whenever things really start getting tight, is whenever they haven't paid for so long. Accounts payable is bills that you're supposed to pay. You know you're gonna have to pay him once it's done. And then once it's done, if you don't pay him, you are behind on payments now. How behind just depends. They call it net 30, net 60, net 90, net 120, which is you could pay them in 30 days, 60 days, 90 days, depending on the contract that you guys signed or your invoice that you had the customer sign. This is where the cash flow problems really start to show. If 40% of what you're owed is 60 days or over that, you don't have a revenue problem because you've already made the sales. You've got the revenue, but you haven't collected, so you have a collections problem. And if you're constantly pushing vendor payments past their due dates, you're using them as a bank, which works until your credit terms disappear. Healthy businesses look at these reports and know exactly what they're owed and what they owe, what's coming in, what's going out. If it's supposed to come in, they follow up aggressively. They control the outgoing time and monitor aging every month. Revenue is just theory if you haven't been paid yet. Collections are execution. This report measures your discipline in the business. And when you combine this sheet with all the other four, you stop guessing, you stop reacting, and you start operating with clarity. So in all, business owners think that bookkeeping is just about taxes. They're not. Taxes happen once a year, but business decisions, they happen every single day. The profit and loss shows efficiency. The balance sheet shows strength. Cash flow shows survival, and your A and AP shows discipline. This is why clean books aren't about taxes. They're about control.